Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, TGIF, February 25th. We're almost through the month of February here. And I want to apologize first off for not being able to upload a couple of Daily Market Reports the last 2 days. I actually had something kind of abrupt that suddenly happened. It was actually good news for myself. I joined a new company, First Cal, some mortgage. I'm pretty excited with it, so I'll be with the likes of some great people, Dan Rowich, who also has his own daily market report, as well as some great loan officers, Jimmy Forcier, Scott Nicholson. It's going to be an honor to be associated with those folks. So some great things. I was flown up to Petaluma, kind of spare the moment and for some training. So I unfortunately, didn't have the time or the access to be able to provide you folks the reports. So I'll give you a slight recap of what's going on. So let's take a look at the economic news for today. We have the GDP, which was second estimate, and it came in lower. So doesn't bode very well, especially for the job outlook, because obviously we need economy start taking off to be able to have that business to be able to hire more people. The GDP deflator came in slightly low, higher, 0.4%. Michigan sentiment also came in. That was the final revision came in, and that came in a little higher, 77.5. So pretty good news there. Stock market's up. They're trying to be a little determined of the last couple of days of losses, so they're trying to close above. There's a little article I saw on the Market Watch that was saying that the Fed was talking about maybe restricting the banks from increasing dividends in 2011. Quite a few banks sent in permission, but there's still concern for the liquidity, for the stress test they're going to run on these banks to see if it even makes sense for them to do so. Obviously, it won't bode well if we have another problem and then have to bail them out again when they've already increased their dividends, paying investors out. So it's not fair to the payers. So let's recap the last 2 days. The economic news for the last 2 days, where we had the existing home sales and durable goods orders were both up. That was on Wednesday and Thursday, and then Thursday's we had the jobless claims and new home sales. Those were both down. So good news on the jobless claims. New home sales were down. That's not a surprise because February is typically, January, February are pretty slow months, and it starts kind of cooking up a little bit as people just get over the holiday seasons and just start winding in. And we get the spring, and summer starts heating up for homes. But they're down a little bit, so but that's kind of to be expected. And last year, you're talking comparing this to last year where we had tax incentives, so the numbers are kind of skewed in that sense. So let's take a look here at the bond market. We're still on the upward trend, which has been great. We had increase. We're pulled off from the highs yesterday, last 2 days, as we mentioned here. So here's where it was Wednesday. We were up a little bit and pulled back a little bit. Then we had this little gap up here where we pulled up and pulled back down. So we're still sat down, but now we're here straight across. And now we're up about 15 base points. So we're still within the range. It looks like we could be knocking on the 102 mark here very soon. The number I think to really be watching is right around the 102.80, 102.90 mark, because on the 4% coupon when we were back there, that was around the mark area where we had a hard time reaching the 101 mark, and that's where I think we need to kind of watch. It seemed to kind of create a ceiling there. Every time we hit it, it would be bounce right back down. So it'll be once we break above that, we have some extra room to grow from there. I think we'll have some. Rates are still continuing to get a little bit better. Again, I don't know if we'll see the same rates we had back in October, but this will be something that we could see at least some more improvement from there, at least probably since last, I think it was May, we had some pretty good numbers as well. All right, folks, you guys have a great day. Rates are showing some improvement here. Mortgage rates, interest rates are showing some improvement here, and you guys have a wonderful weekend.